Hi there. I'm Andrew Bosserman, a tax controversy attorney with Boss Tax Law, and I specialize in resolving business tax issues with the IRS. Today, I'm going to walk you through everything you need to know about getting your money back from the IRS when your business has overpaid its taxes. Because let's face it, that's capital your business could be using for growth, not sitting in the government's pocket. So, first, let's start with the basics. As a business owner, if you believe you or your company has overpaid taxes, whether that's income taxes, employment taxes, excise taxes, it could even be penalties, you have the legal right to file a claim for refund. But there are important rules and deadlines you need to follow that are particularly relevant to businesses. First, in most cases, your business must pay the full amount of the tax, penalties, and interest before filing for a refund. This can sometimes be a significant cash flow consideration for businesses of all sizes, but oftentimes you've already paid the money and are just due a refund, so that might not be an issue. But here's an important distinction most business owners don't fully appreciate. There are really two main ways to claim a refund. And the most common way, which you've probably done before, is through your originally filed business tax returns. Whether that's your corporate return, C Corp or S Corp, could be a partnership return, or Schedule C on your personal return if you're a sole proprietor. And oftentimes with flow-through entities like partnerships or S Corps, you're actually taxed on that income at the individual level. So you'd need to file a claim for refund on your personal tax return. So millions of businesses claim refunds this way each year, either through their business returns or on the owner's individual tax return. But if you don't file the appropriate return within the limitations period, your refund claim is lost forever. For businesses that have complex operations or those going through transitions, missing a deadline like this can mean substantial lost capital. So let me reiterate that again because it's extremely important. If your business doesn't file its tax return within 3 years of the due date, any refund you were entitled to is likely completely forfeited. But I'm going to discuss an exception. There's a 2-year rule that also applies. But not filing your tax return timely, this can be especially problematic for businesses where tax overpayments might involve significant sums that could otherwise be reinvested in operations. And that money's then completely gone if you don't file the refund claim timely. The second way to claim a refund is through an amended tax return or formal refund claim after you've already filed and paid your taxes. This often happens when a business discovers tax planning opportunities or accounting errors after they filed their original return. Like I mentioned above, business owners filing claims for refund, timing is everything. So here's the main deadlines you must meet. Your business must file its refund claim within 3 years from the date you filed your original tax return, or 2 years from the date you paid the tax, whichever is later. For businesses making quarterly estimated tax payments or dealing with multiple tax types, such as payroll, excise taxes, income taxes, tracking these deadlines becomes even more complex. And here's another point that many business owners miss. Your refund is limited to the taxes paid during the applicable period. So for businesses with complicated tax payment structures, understanding exactly how much can be recovered is crucial to maximizing your refund potential. And oftentimes this happens when taxes are paid after the due date of the return or later on. So that 2-year rule might come into play if you've made later payments. But let's talk about the actual process to file a claim for refund and what the IRS does. When your business submits a refund claim, the IRS has 3 options. They can just accept your claim and send you a refund. That happens. They can examine your claim, which essentially means they audit it, or they can just reject your claim outright. If your business's claim is examined, you'll face pretty much what amounts to an audit. For businesses, this means providing detailed financial records, documents of the transactions or what gave rise to the refund, and explanations of your operations. This is where professional representation becomes essential to protect your business interests and make sure you get the refund you're entitled to. This next point is also critical for businesses, especially with complicated tax issues, but your refund claim must be complete the first time you file it. So you must make sure that the claim identifies each item your business is claiming a refund for and why you are entitled to the refund. On an original filed tax return, that's generally not too difficult to do because there's enough information. But on amended returns or after the fact, this sometimes comes into play. And I've consulted with business owners who tried to file amended claims for a refund after the fact, but the IRS rejected them as not having the appropriate documentation or it being complete, and then the taxpayer lost the refund. So you definitely want to make sure that your refund claim is complete when it is submitted. Let's talk about what happens if the IRS rejects your claim for refund. They'll issue a notice of disallowance, which is a letter you'll receive in the mail saying that the IRS has rejected your refund claim. At this point, you have two choices. Either you can just accept their decision and lose out on your money, or you can fight back by going to IRS appeals or filing a lawsuit. If you decide to file a lawsuit, you must file your lawsuit within 2 years from the date the IRS mails the notice of disallowance. Part of if you think litigation might be a possible route for you, you'll definitely want to factor in the potential recovery you're seeking, the amount of the refund, and also the costs of litigation because those are not always cheap. But here's another scenario that often happens, and it's happened quite frequently with the ERC credit that businesses claim during COVID. What if the IRS just doesn't respond to your claim? If 6 months pass with no action, your business has the option to file a lawsuit. This is optional. You can decide to wait for the IRS to make a decision on your claim, no matter how long it takes. But for businesses who could really use the refund, sometimes moving forward with litigation is the best strategy. And sometimes you'll want to file suit if you're coming up on that 2-year deadline from claim denial. You'll definitely want to file suit then. But if the IRS doesn't respond to your claim, then you may want to go ahead and file suit to get the ball rolling and get the IRS to respond to your claim. So if you are going through this refund process, you need to have a competent tax controversy attorney for a number of different reasons. First, tax controversy attorneys like myself, we understand the unique tax issues that affect different business structures, whether you're a corporation, LLC, partnership, sole proprietorship, whatever type of entity you are and whatever type of tax status you are, I have that expertise. Also, tax controversy attorneys handle refund claims for businesses in many different industries and understand the tax considerations relevant to your business. Also, if your claim ends up being denied, filing suit in federal court requires specialized knowledge of business tax litigation. But also, if you decide to go to IRS appeals, that also requires specialized knowledge of how the independent Office of Appeals works. Like I mentioned before, these proceedings can be costly, but calculating a cost-benefit analysis, we can help you kind of weigh that decision and what path makes the most sense for your business. And also by helping you maximize your recovery and expediting the process to get your refund claim, we help your business's cash flow so you can get the money you deserve to reinvest in your business. So as I conclude, remember that if you're due a refund, it's your money and you have every right to get it back when you're overpaid. But the IRS refund process has strict rules and deadlines that can be particularly challenging for businesses to navigate. So if you think you or your business might be entitled to a tax refund, don't wait. The clock is ticking. The opportunity cost of an action grows every day. And if you think you're due a refund, schedule a consultation with a tax controversy attorney who specializes in business tax issues to ensure your claim is properly prepared and all your business's rights are protected. So if you found this video helpful for your business, please subscribe and share it with other business owners who might benefit. And if you have any specific questions, feel free to drop a comment or reach out to me. Thanks for watching. And remember, don't let the IRS keep your business's money.